What's up, everybody? In my last few videos on the housing market, the most conservative industry insider has been Mark Zandi, who said, if you remember a couple weeks ago, that the price appreciation for homes in the next 12 months is going to go down to 0 by this time next year. So I wanted to show you a clip of Zandi talking to CNBC just last week about the housing market and the future of the housing market and what he sees happening. Let's just take a look and then we'll discuss after.
I think back to 2007, 2008, when there was the housing crash. Are we on track for something remotely approaching that?
No, Tyler, relax, not that. A number of big differences between now and then. First, there's a very severe shortage of homes today. The vacancy rate across the housing stock for rent for sale is pretty close to a record low. Direct opposite. Back in 08, 708, in the housing bubble, vacancy rates were at record highs. Second big difference is mortgage lending. It's been pristine, 30-year, 15-year fixed rate loans, nothing complicated, no 2-year subprime loans, no ninja loans, no neg-am loans. And so underwriting has been excellent, and I just don't see any significant increase in mortgage defaults and foreclosure. And it's those distressed sales that really cause big price declines. So no. The market's going to weaken. There's a come-up coming, but nothing compared to back a little over 10 years ago.
Okay.
So clearly Zandi is saying that there's a comeuppance coming in the housing market, but this is not the same as the bubble of 2008. I know this is not a popular opinion. I see what you guys all see, that we all are seeing all of these videos talking about a crash. But I think we may be looking at more of a correction. But let's continue. We all can agree that lenders are much more strict in their criteria than they were back in 2004, 5, 6, 7. And without an influx of inventory, the market simply can't turn into a buyer's market from a seller's market. That being said, a correction has already started and will definitely continue. Zandi predicts that price appreciation will be down to 0 by this time next year, and actually he may be right. But even if it does head to 0 by this time next year, prices will still be above pre-pandemic levels. I mean, the prices have gone up 20% just in the last 12 months alone. Let's take a look at Lawrence Yun, the National Association of Realtors chief economist, and see what he's saying about price appreciation in the near future.
What's happening is that mortgage rate really shot up, 200 basis point move from the early part of the year. Consequently, the lifeblood of the home sales market is getting hurt. So pending contracts, as you mentioned, along with new home sales, are now coming down back to the pre-pandemic sales activity after the huge surge of 2 years. So it's just inevitable that home price appreciation will slow down in the upcoming months.
Yeah.
Okay, so what is actually happening in today's housing market? Right now, we're at the end of June in 2022. Are prices being reduced from an all-time high? So they're less, but they're still higher than a year ago? So in other words, they're kind of fake reductions because prices have still appreciated from a year ago? Or are they really seeing some prices reduced in the housing market in general to get below that level? Here are my thoughts. We have fewer buyers than ever because the higher interest rates have simply priced out a lot of buyers. As such, sellers are having serious FOMO, the fear of missing out, and they're still trying to get those high escalated prices from a few months ago. In my experience, it's the kiss of death when sellers base their prices on homes that have just recently closed. Because as we've spoken about in previous videos, these sales have a lag time of 30 to 60 days, and the market simply isn't the same as it was a few months ago. Interest rates have risen dramatically, and I just don't see them going down anytime soon. So sellers now overprice their homes, and the buyers that are left after they've survived these interest rate hikes are onto them. They simply will not accept the inflated prices. Therefore, sellers must reduce their prices in order to get the buyers to buy. And once a price reduction is set, the house kind of feels a bit stigmatized in this seller's market and may be punished for overpricing it to begin with. If a house sits on the market for more than a week or two and has a price reduction, buyers may overlook it completely. Let's take a look at Yun's response.
Well, let's first clarify what the price cut really means. So the home sellers essentially listed their home 20% above last year's price. Now they are reducing it. So the prices could still be up 10% or 15% from 1 year ago. So, but the sellers are clearly recognizing that higher interest rate is essentially squeezing away some of the buyers. The multiple offers in some cases are not happening anymore. Homes are maybe sitting on the market, certain homes that are mispriced. So it just means that the sellers need to be very realistic to the market conditions. We have a shrinking buyer pool because of higher mortgage rates. But now the home sales are retreating back to the pre-pandemic levels. Let's hope that mortgage rates stabilize and we have the job growth to continue to provide some support for housing demand.
So basically, he confirms what I've been saying about those greedy sellers that are not taking into account the recent mortgage rate hikes that are outpricing some buyers and listing their houses at reasonable listing prices. I think these next few months are going to be really interesting to see how sellers and their realtors adjust to this market and adjust their listing prices. Let's take a look at Fortune's article, which talks about the great deceleration of the housing market. Lambert spoke to Logan Mohtashami, the lead analyst at Housing Wire, who said, "For me, the best part of the housing story in 2022 is the rise in inventory, as this will put home sellers and builders in check. They had too much pricing power and they pushed prices way too high. Rising inventory is a direct result of higher interest rates between the seller's FOMO and buyers being priced out of the market, just less buyers. But while inventory levels are rising fast percentage-wise, they're still far below pre-pandemic levels." Mohtashami agrees. Even if the great deceleration picks up steam, it will take time before we're back to a pre-pandemic housing market. The housing market is still savagely unhealthy because of low inventory levels in America, Mohtashami says. In order for us to return to a normal housing market, we need to see national inventory rise to a range between 1.52 million to 1.93 million units. To give you context, the National Association of Realtors puts inventory today at 1.03 million units. So we are way behind. Mohtashami's biggest fear is that mortgage rates begin to fall again and the momentum is lost. If that happens, this great deceleration may come to an abrupt halt. While I'm very encouraged that inventory is rising on a year-over-year basis, we need it to stick and head a lot higher. My concern in the future is if rates fall again, some of the inventory gains we've had will go away, Mohtashami says. As we know, interest rates can fluctuate daily, but the Fed Reserve has indicated that they plan on continuing to raise rates. So in my opinion, the only thing that can really bring rates down is if our economy just suffers too much and they can't sustain the higher interest rates. With what's going on in Russia and Ukraine and all of the political unrest, coupled with inflation being at an all-time high and buyer confidence being at an all-time low, this is definitely a possibility. I guess time will tell, but let us know what's happening in your neck of the woods. What's happening in your local market? I always feel the best data is told by those who are actually living through it and feel what's happening around them. So please comment below. Here in the DC area, it's literally neighborhood by neighborhood, house by house. I've seen houses in the same neighborhood in the same week. One of them has multiple offers, goes way over, and the other one has their price reduced because those sellers overpriced the house and they did not market it professionally. I have to tell you, being in this business 24/7, if a house doesn't show well in today's market, buyers will pass it by. It's more important than ever, in my opinion, to really get that house marketed professionally and shown the best it can. So if you're thinking of selling, hire a professional, price it right, and market it professionally. Give the buyers the respect they deserve, and I promise you, you will be rewarded. I hope you got some value out of today's video. I mean, I think it's pretty clear that the market has shifted, that is correcting. I still don't think it's going to crash, but I do think that the correction is taking place as we speak. It just depends on neighborhood by neighborhood, house by house. I really want to know what's happening in your neck of the woods. what you see happening on a daily basis in the housing markets. And if you did get some value out of today's video, please consider subscribing to our channel, smashing that like button, and commenting below. It helps us with the YouTube algorithm and motivates us to make more videos. I really try to bring you guys the most up-to-date information that I can either experience myself as being a realtor in today's market, or gather information from the industry insiders and give you their commentary and give you my opinion on what they're saying. If you'd like to see more of my housing market videos, definitely check out some of these videos that are coming up next. I hope to see you again. I really do appreciate you watching. Thank you so much. Bye.